good evening, good night, good morning, depending on where you are on this map. To those who celebrated, happy holidays. Merry Christmas. Happy holidays. And speaking of holidays, I finally got my microphone back. So you should be able to hear me pretty damn good. And the reason why I'm going to say happy holidays is because this microphone, of which I brought about a year ago, it's been finally gifted back to me. So cheers, happy holidays, and hopefully you'll be able to hear me pretty damn good for this little recording. This market update is for the 19th of December 2015, going on midnight. It's about to be the 20th. Alright, I'm gonna get right into the charts. And actually, speaking of the charts, it's loaded up. Excuse me. Okay, so I'm gonna put down that for now. And pretty much like I said, we're gonna get right into the charts. And at the end, I'll go into more of I guess the ramble. So you can save the ramble and just skip that part. We'll leave it for last. And if you're not interested, just get into the charts. So business first, talk later. Alright, but for right now, let's start off with the disclaimer. Investing and trading in the financial markets impose substantial risks where one can lose all or more than their initial investment. The content provided by myself are for educational purposes only. All ideas and forecasts mentioned within are simply my opinions and not investment or trading advice. Trade at your own risk. Alright, we're waiting for the wonderful TD Ameritrade to load up. And in my opinion, it's actually pretty doing good. Had wires that was pretty chewed up by dogs. So right now I'm running off of Wi-Fi. And honestly, with this router, multiple routers, we should be rocking and rolling. It should difference should be about 20% drag. Active. Are you active upstairs? Okay. Alright. I'm not sure how this is gonna load up, so it's been a while since I have really popped this open. I was talking with a few people. A few of them new. They want to have an understanding of how I trade, or what the heck do I use. And I mean, I do have past videos. Honestly, it's simple, and that's the key word. And I want to know what platform I've been using, or what platform do I use. And for the most part, it really shouldn't matter, because I've made this a point to somebody. It's been now 4 months, what is this, December going on January, 3 months going on 4, that I've been pretty much mobile. I have not loaded this thing up other than to pretty much get a number, which was actually account related, but for the most part, mobile and a calculator, and that's all you need. In my opinion, that is all you need. Alright, let's get right into it. All pretty much this video is going to be focused on is the spoofs. I'll probably do another detailed with other things. But again, just right now is S&P. That has been the main forefront topic last week in the market. You can really say 2 weeks. Yeah. Okay, this is an old fib, and you sort of have to be a little bit current on me. I'm not going to go into history. The only history I'll go into is probably 2015 up. Nothing Nothing before that. This was the anchor I told you to watch out for. It was this lower, this higher low, and we have traded it, and actually it looks beautiful. But this is where I believe the fake up off of it, and then pretty much this is now will be the second test of this anchor. It's coming in from the September lows, not the August lows. Right, it's a difference of 30 points, mind you. Now off the correct anchor, off the 1831s to these 2110s. Alright, this is why I say 1971. This is going to be the first test of this long, since bouncing off of this major long, this line right here is 1586.75. You should know what that level is by now on your chart. If not, draw a horizontal line on it, 1586.75, and you know exactly where I'm getting that anchor from. 1586.75 to 2134s. All right, when we traded this early August, all right, this yeah, pretty much early August, late August. All right, when we traded that level, all right, we actually blew right through 60s and went down to 31. All right, this is the first trade of support. However, this will be the first continuation trade. All right, meaning that this is the secondary leg. This will be the leg to determine if we're going to have continuation higher. And I really believe we'll be trading the Sunday night, Monday morning. And typically in this bull run up, any liquidation break or any kind of downside on a Sunday, Monday night has been statistically profitable. All right, whether it's a short-term trade or longer term. Longer term actually has showed you that this trend is up. So Sundays and Mondays has usually led to really emotional news when somebody just too risk down pretty much, and you have people who are shorting the holes or selling lows. All right, it's a combination of all of these things, where typically Monday we wind up reversing most of the losses. Alright, so not to say it's going to happen, it's set in stone, but it's something just to be aware about. You know, it's Sunday, Monday coming up. Excuse me. Well, it is Sunday in the next 6 minutes. Futures will be open in the next 16 hours. Excuse me. 18 hours. You sure my math is wrong. Alright. We'll be trading. Alright, me, I'm waiting for. Again, on Twitter, you'll see my posts. I'm not gonna go and bring up Twitter and say, see, I said this and that, whatever. Here, you have to understand, this level is not set in stone. This 1971, I'm rounding up, it's not set in stone. This is sort of, think about it like this. Another way to think about it is the box trade. Alright, anywhere from red line up, not below it. The reason why not below, because if it trades below, it's likely to go even lower. The risk will increase that it will go lower. Alright, we're not talking about that now. We will visit that as it arises. But for now, I'm going to take it as this long is going to trade. Buyers will show up. Alright. If they don't, that remains to be seen. This trend is up. Respect it. From 1937, that's 75. You can say a trade on the 1937 half. That should be where your line in the sand is at. And if is this drawn right? Let's make sure this is drawn right. Alright, because we are talking numbers right now. This is where it should be very accurate. Let me get a fib going. 1831, and we're gonna even make sure it's typed in correctly. This is what I do every time. It's just real quick, snap it just about, and what you can do is you can just double click on it it should bring up the box and you could type in the numbers yourself. So 1831. Just trying to show you little things to do that it'll make your life a little bit faster, especially with Thinkorswim, knowing how crappy sometimes it is. You gotta deal with these things that are given in front of you. I believe it was 2110. I thought it was half. We'll check that just in case. But numbers, bam, 31, 10 quarters. Alright, let's just check that. 10 quarters it is. Alright, so this is your number. It's 1970 half. Alright, so that is your real actual buy number. If you wanna, I would round to the point to where it's more conservative. Alright, so you wanna say it's 1970.75. Alright, and your line in the sand is 1937 halves. Alright, you shouldn't be printing below halves. Right, meaning my stop is going to go under 37 halves, meaning that my stop 1937 quarter triggered out. Market out. Not, it's no ifs, ands, or buts. Not to guess. You're likely, and this is the situation sometimes you're faced with. It does happen, and it's often. All right, meaning that if you're wrong, you're likely to get taken out on the lows. You'll be if I'm the buyer here at 71s, you better believe if this is wrong, I'm probably getting stopped out 37 halves, and that's probably will be the low of the day. Alright, so I want you to start thinking like that. Sometimes that happens. Sometimes it likes to go and dig deeper. Alright, so this is the reason why I follow rules. My stop will be under halves. Alright, 37 halves. If it takes me out and reverses back up, what's likely to happen, if you get stopped out here, what's the next move likely? It's a trade higher, and it's usually into another halfway back that gets sold. So don't think you got stopped out. You got stopped out, but a lot of the people who are participating on that trade got stopped out too. So their initial reaction, it's up to them to really make that trade better or worse. So by better is now you step back and say, okay, what happened? Alright, I got stopped out. That was a right trade. Hold on, let me check my numbers. Did I draw correctly? Drew correctly? Okay, yeah, I got stopped out. That trade is incorrect. So what's really going on? You take a step back, reanalyze the situation, check your fibs, check everything, and there may be another trade setting up, and it may be complete 180. Right? Meaning that you was once a buyer, now you're a seller. Alright, and then you're looking the other way. And at the same token, you're looking at what's next after that. If this trade doesn't work out, what's next after? Where are you running into? Pan back out, and if this setup was to break, well, in all reality, we still have to get under 1795. And that's a long ways down. Not to say you're going to buy this and hold and put your stop on the 95s. No, that's not what I'm saying. But meaning that until this breaks as well. This was derived from the 7-year profit chart. Until this breaks as well, the trend is still up. Alright, so as scary as this looks, as nasty as it looks, and chart pattern wise, we're not going to go into that. As drawing wise, it looks like a bull flag. Alright, consolidation, bull flag right below a breakout. Alright, so we shall see. Nothing is set in stone. This trade can fail. Alright, and we are right there. Alright, how can we analyze this more? Alright, this was in the past. I know I've been a little bit mute, but this is what I mean by nothing has really happened. It's the same setup. Nothing has changed. Been waiting, mind you, from long ago. I was a seller. Alright, and down here, this is the reason why I was covering. Alright, I wasn't a buyer, but I was covering. At least covering. Once we failed that setup, the short, and let's just get rid of this real quick. Once we failed this setup, the 21, actually let's get rid of everything. Let's actually hide it. Hide everything. Hide all drawings. Alright. The setup before was 2134 is down. Alright. Right, you see this participation right here? See this red damn shooting star just about? Alright, that was a sell. People were selling that. Alright, but that was your break up. There was a lot of participation on it. Alright, but once the break happened, it was a straight up squeeze. And do you remember those setups? I sure don't. Right? This is the reason why, you know, you will draw millions and millions and millions and millions of fibs. You'll constantly be the more active you are, the more you are involved, the more fibs you'll be drawing, not from larger scale time frames down to smaller time frames, down to your active initiation time frames. Right, so this is the reason why it's been, not to say it pays more to be patient. I'm not going to say that. That's not my argument. But for someone who is going to be carrying a lot of size, you're not actively hitting all offers, or you know, selling everything. You know, it's you're waiting for prices to come to you and you berg it up. And you can really make a nice penny by waiting. All right, you'll notice one thing is you have to put yourself in a player's shoes who is carrying size to where the fees yet alone. I mean, and we're not talking about any of the redemption, or liquidity rebates. All right, because honestly, the amount of rebates that I get, and it has to put you only when you're active. All right, if you're not pushing millions on both sides of the trades per day, meaning that you are actively providing liquidity, your rebate is really, it's not even substantial. All right, meaning that to where if you make a good trade, you look at the rebate like it's mice nuts. You know, keep the rebate. Right, focus on the quality of your setup. Right, if you're right now you're trying to build an account, honestly, you really should. If you have $5,000, you shouldn't be playing in the futures market. And if you're playing in the futures market, you should be looking at the micros. The micros, I'm talking about currencies. You should really be trying to take your time to learn how these algorithms move this market, and to how can you profit from latching on, to participating with them, and not using your thesis to determine what your positions are and what your direction is. So you can be wrong 99% of the time. Alright, but knowing that when you're wrong, what do you do when you're wrong? Alright, so it's a lot of people like to say, you know, what's more important, your entry or your exit? Alright, and it's a very challenging question. You have to understand what is that asking of you. This is my own opinion, but anybody can go in and place a trade. Right, but where are you going to get out that is going to be most efficient to keep you from at the same time feeling like you missed something, and making sure you are cost effective and getting the best bang for your dollar, for your risk dollar. The reason why I bring this up is just show you as net sideways this market has been, you know, from last year to this year. I mean, from December to December, we're pretty much sideways. All right, the euro, it's pretty much everything has the feel as if the setup screams bullish, but yet there's this overhead. You have the Russell just dumping. All right, it's not to say that, you know, this whole effect that the Russell must lead. I'm not gonna get into that. That has no weight. But just to show you that there are things that are showing extreme weakness. This whole theory that this market could be just in replay mode. I started off this year as laughing as the coinage, as what the China Mint does with their coins, and it's the year of the sheep. And I find it funny, you know, just to look at how much we chase price, to what degree. To pretty much some won, some lost, and where did the market go? Pretty much nowhere. Alright, so it makes me, and let's get rid of this. Where's my drawings? Show drawings. Oh, okay, there you go, excuse me. That pretty much, we're just replaying the same event. Alright, and it just doesn't show up just on this chart on the S&P. It shows up in a lot of charts. Alright, I mean, commodities are still just getting beat up. This was ever since the euro broke support in October. Alright, once the euro just fell apart again, broke 110, remember that? And boy, I wasted pretty much just about this whole year on that trade. Alright, and this was after all of last year, as far as just hammering the euro. And then there was some signs that, you know, the dollar is in a double topping process, a long-term yearly setup. And everything has this overcast effect, as it looks like a replay. And on this chart, what it looks to be is, yeah, looks to be an head and shoulders, or some kind of rounding top, or an H pattern, or M for murder, whatever way you want to look at it. That's what the eyes immediately catches. But the skill of this chart, not what lies on this side, but pretty much what lies on this side. How to predict what's going to happen on this side. And to some essence, yes, you do have to know what happened in the past to know where you're going. But again, it's that overlying effect that, you know, it's getting the noise from out of the chart. Alright, and this includes the talking heads, whatever that may be, however that fits, holds true to you, the phrase, the talking heads, however that fits to you. Alright, the noise. Alright, it, in some ways, it plays a lot of effect on you, and you have to be able to eliminate it and look at what's in front of you. And right now, this shows me that there are buyers. Right? This anchor, where the heck is this anchor coming from? I see things just like, sometimes they sort of interest me, you can say. Where the heck is this coming from? I just wrote it, because I know this is from, this line right here should be measured from here to here. Yeah. Alright, so usually I'll just double click it and drag it and make a nice little line, make it look all cute and organized. Alright, pretty much story is still the same. Alright, I'm really a believer that this week would be this trough low, and we'll start heading higher. Next target up on the S&P, just long we don't breach 35 times. I think that's wrong. Yeah, it's typed wrong. I guess it's the old one. 1831 2110 quarters. And again, that number, so you can see it, is 1937.67. So I say that's half. So pretty much we should not be ticking below halves. A print of 1937 quarters, look for downside. Not to say it's gonna happen right there, but it's possible that we just keep going. Alright, again, first target above is 2176, and then the bigger target is 2261. Alright, dollar again, for anybody who I didn't talk too much about it. A lot of people really are not I guess interested in currencies and dollar, which honestly I believe that's what the big story of the market is. And everybody loves this E-minis. Dollar is in still a sell, still confirming. Cannot I mean, it does look very... we'll see. We'll see. Only time will tell. And this is a weekly chart, mind you. See what's going on in the daily. Bam, broke. What's doing here? And still got some way to run down, but below 95.5, I'm gonna say again, this dollar is in trouble. Alright, for right now, that's pretty much my line in the sand. We'll see. Bonds. Real quick, and I'm really don't want to go too much into it, but again, target's well up above. No continuation though yet. Still sloppy. Still sloppy. Yeah, still sloppy. I'll just be patient and wait. But right now it's not showing any downside either. It has trader support, and it's like it's just collecting. What? Don't know. Gold. You know, I hate to say I told you so. What was the next target on this one? I even forgot it. And forgive me, I have this thing in the damn way. Gold from I believe it was 1191. Forgive me a second. Oh yeah, exactly. It was 2015 early highs to July's lows. Alright, the 1190, remember that one? That was your sell again, and almost at target. Alright, just to show you, I mean, proof is in the last videos. Everything is before the fact. Right? It's just if you have the patience, because honestly it's you have to wait for it. That's the only way these charts make sense. You have to wait for it. If you're not convinced by now, if you're not confident in the charts, then you have to find something that's I guess it's you're gonna feel good about. Right? But to me, this is the repetition of it. This is the discipline of waiting for your setups. Almost at target, 1016. And when we get there again, we'll be buying physical again. Every single target on the way down. Every time I'm making bank on a monthly basis, I pull out and into physical. Right? It's something's going to happen. Don't know what, but remember the saying, never fooled? Going out since 1999. Alright, actually it was the 1999 highs, actually, yeah. 2 all-time highs, that's your anchor. Right, because in these little setups, once gold broke out, it never traded back and just kept going. And since then, it's been in extensions. It's been one after another, after another, after another. It's crazy. Alright, so people's I guess their eyes determine what kind of trend it's in, right? People see this downtrend, I see something else. Alright, so I guess it's a matter of interpretation. Alright, this is the reason why these algorithms, they don't have no feelings. They're just sitting there and waiting. They're programmed to just wait. When they get triggered, they're buying. When they get triggered, they're selling. When they get triggered, they're taking profits. It's like a light switch. On, off, toggle, 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 toggle. That's all it is. We see this and we get emotional. Alright, so let's get back into the spoos. Alright, let's look at the smaller time frames. That way you'll be prepared for this Sunday night, Monday morning. And honestly, it doesn't even have to happen then. We can actually gap up and just keep building this. Alright, whatever market's gonna do, whatever it wants to do. It's just you have to be ready to respond at key levels that require your I guess your undivided attention at. Alright. Oil. 31, I think it was 99. Actually, it was 98. Let's see here. Like it's not even here. Let's get rid of all of oils. Just show you see how quick I can find it. See if my eyes are pretty much good. This was the new August lows. So from these highs to lows, that was your short again, and almost at target. Let's go back to the spools. All right, smaller time frame. And mind you, you have to forgive me because I do not watch the smaller time frame. I really don't. Not to say I don't have time for it, but that's why I feel like, how can I put it? I'm probably just not as great as disciplined as I wish to be, and therefore I know I do overtrade. Alright, so from this day, 2105, when did the last setup start working? Let's find out. Oh, that was your first one right there. Alright, so it was actually 2 weeks ago. Let's figure out this day. It was December 7th. Alright. One thing I want to real quick do is Fed week is real quick highlight. Alright, this was Sunday, Monday. Alright. We never miss nothing on the Monday. Alright, but mind you, this is all Fed week. Alright, and Fed came out Wednesday into Thursday. Let's just highlight Wednesday trading hours finished. 1600, where are you? About here. Alright, this was all Fed day. Alright, retracements. I need Sunday the 7th, right about here. From this high to this low, right here. This was your short. Bam, to target. Bam. Target was there. Actually had a break. Alright. I want to real quick just pause, and it's just funny because I was just talking about it today with somebody. Met somebody else on Twitter. You know, a lot of people who they communicate with me, they'll wind up communicating through private messaging. Right? Mind you, I'm not a famous person on Twitter. I don't have millions of subs. I guess I don't say what people like to hear. Alright. But anyways, just talking with somebody, I told them that, you know, when the fibs work, they work. But when they don't, you stay away. Alright. Counter trend will be sloppy. Alright, not only will it be sloppy, but it will break. Somebody who is traditional as myself, I'll stick my stop again. We see that red line, that's the 618 if you didn't know. I will stick it one tick away, excuse me, off or above if I'm shorting, above the red line or the 618. Alright, the algo just wiped you out. It knew where to go and wipe you out and then go to target. The reason why that happens on the short is because it's not a short. They know where the stops are at, so they're gonna wipe out your stop. The participants who are really waiting for the long are gonna take advantage of the trend and wipe out your short, and then still go to target and trade correctly. Alright, this is the reason why when you go counter trend or against a trend or not in harmony, it's more dangerous. Alright, because things like this will happen. Alright, so this is a big clue right here. This is a big telling right here that even though it went to target and there was an entry and it did work one time, alright, you have to look at it like this. This was more of a, because mind you, it didn't work here off the highs. Alright, this is the reason why I tell you I draw lots of fibs daily. Alright, if I'm very active, because you have to be keen to when they are working. Alright, meaning that I'm here, okay, this is not working, so there's no trade there. That broke, okay, oh shit, sell off. Is there another trade? Is there entry? What about the long? What's going on here? Nothing. You're constantly doing that. You're measuring. Once they start working, once I see this, okay, alright, high tick into it, okay, bam, okay, I'm looking for the next one because I want to participate. So being that went to target, what am I going to do? Alright, so I'm going to draw to here and look for an entry. And I'm probably, like usual, I'm not trying to get greedy and try to buy into it. I'm selling right at the yellow line. So as you see right here, if you really examine it, there was some participation. Then and then bam, smack them out, and then to target, immediately to target, not even giving them a second to guess. All right, so this is how I show you how crazy it could be. All right. And then right on target, if you look at the time, 11:30, time to go to lunch. Algos bounce around throughout the rest of the day, just trade sideways. This is how crazy it is. Alright, it when it works, it works. When it doesn't, you stay away. Alright, but then when somebody has to eat and perform, they're gonna look for these setups. So it's not to say you can't take these short setups or these counter trend setups, but if you're gonna play counter trend, trade a lot smaller than what you would do in harmony. All right, in harmony, being that there's people supporting you, you should take advantage. You should be I don't want to, how can I say, I don't want to really advertise it, but you should be balls to the walls, over leveraged, aggressive with your risk reward parameters, within your risk reward parameters. All right, with good position management. I'm not trying to say it'd be reckless, but that's when you should be more aggressive. When the trend is up, you shouldn't be shorting. All right, when the trend is down, you shouldn't be buyer. You shouldn't be buying every single dip. All right, this is it should be psychology 101. All right. Again, it started working here. All right, so this is the reason why this was stopped out, sloppiness. All right, so but then still goes to target, so measure it again, and then starts extending down. So you're likely to think that this thing is an extension, so you're measuring now from, let's get rid of this one, from here to here. Alright, let's just hide the square, or let's erase it, I'll put it back, or can I like move it for right now? Yep, that's what I'll do, get it out the way. Alright, so once this happened, I guess this was here, then here. And being that this just blew past the target, you know you're in extensions. So being you're in extensions, you don't measure your typical way, which is low to high, high to low. You measure from extreme to extreme, which is from low to low. Alright, so just to show you that this was your trade again. Alright, to target. Alright, this is the reason why I was selling originally 14s, got stopped out at 20s, but then what I had noticed was the next measured move, which was down. Alright, and this is why I was selling 25s. Alright, and if you didn't know by now, I sold 25s. I didn't have a stop in. I felt good about the position because I knew it would break. Alright, I added a little bit more above this trade up above here. I took the whole damn ride up on 18. Whole ride up, did not add. Took the whole ride back down. The only thing I was doing in this area from here all up into here on Fed day, straight up buying puts. I had cashed out of all my calls right in here and brought puts from here up to here. And Friday I am flat puts, and I've been back in calls all Thursday and all Friday. Alright, so this is the reason why I want to real quick talk about this square right here from start of Monday week until the finish of Fed. Alright, it's one of the most dangerous times to initiate a long-term position. It's a day trade in paradise, and especially if you're on the right side of the bias. This move was supposed to continue. Right? This next target is down at 62. So, one, you never miss nothing on a Monday, and Fed day is very dangerous. Look at this as erasing all of this. Like, just completely erasing it. Just put your hand over that area and act like that's not even there. Right? And just look at that as just straight up continuation. Alright? You can't really do that because it is there. Alright? The fact is there. But entertain the idea of just erasing that. Right? It's a blast of emotions right here. And this was fueled by people who were overly short, shorting lows, and the participants knowing that being that it is a long and it is very close to the long setup, they can use that as fuel to just as a real quick trade, get everybody out, whipsaw everybody, smack everybody in the face. What kept me in this position right here that night? Gut instinct. And I actually, my first reaction was on this day, on Fed day, was did I miss the long again? Did I really miss it again? And the first thing I was to just walk away. Don't do anything to where, you know what, I didn't have a stop in. So yeah, a lot of damage can happen overnight. But with where we are right now failing at, where we are at this exact moment, I can say I'm pretty much at my brink and ready to exit. So let's watch this. Let's watch this closely, because it needs to roll over now. And lo and behold, the selling started right at night. So I guess a gut instinct, and one, it will never happen again. I will completely limit my risk trading in the non-harmonical direction. Right? It's really uncalled for, because most of, you can say, 1, 2, 3, about 4 months was probably given back in 2 days. And that's how very well oversized I was, just trying to be greedy to the downside. Your money can go poof in a second. Alright, and this is why I try to get you guys this shit. This shit is very real. And when you're taking positions, you just know you have to size up your risk. Right? What's your total overall account size? Can you withstand that much of a stop? And how many times can that repeatedly happen to you before you must make your target? Alright? You're risking on this trade right here, if I'm not mistaken, 33, excuse me, 33, forgive me, about 33 to make goddamn how much? Alright, it's a wide stop, but just know that the trend is your friend. I'm not gonna give you all the bullshit seasonal excuses. I don't believe in statistics as much as sometimes even when they support me and when they don't support me. I like to hear them, but I don't believe in them. This market's on sell mode until we get to this area. I think this is a box trade, and we're just continuing the sell down into it. We're just selling into support. Next target 2176. Alright, this is a 15-minute, mind you. Let's real quick. I know this video is getting super long. Alright, when do we know that this move is over? Alright, we definitely don't want to wait too long, but let's just say from 2105 to lows, whatever lows do develop. Alright, however, that would give you a wide, you'll have to wait a long time and miss out on a lot of upside before knowing it's good to go, it's good to buy. Alright, so another tighter way, just wait for this to break. As far as you know, if we start making new lows below 83, just measure from 83 down. Alright, you can do it that way. That will give you a clue. The better way is just of this immediate leg. Alright, from post Fed release highs. Alright, these what number was that? I think it was 78 quarters or something like that. It was 79. Forgot the number. Let's see if I can get closer. I got us serious 72s. I thought it was 79. Yeah, 72, 75s. That's right. Alright, let me check my paper. Yeah, 72, 75. Jeez. Alright, yeah, pretty much again, just measure from Fed highs. Alright, the overnight highs to lows. So that's another better way. Because there was no, I think it was just extensions down. Yeah, it was pretty much extensions down. And we just pretty much went. Yeah, we're pretty much just falling in extensions. Alright, that day, I said from high to that low, it gave you 30s. I think 30s was put your stop under over. and then it was measured from these lows. Excuse me, was it these lows? Yeah, I forgot where it was. Or was it? Oh, excuse me. Again. Bam to bam. Bam. To bam. And then now bam. Right on down. You can really use these 05s as a very tight stop if you really don't want to risk anything. You can use 5s or 6s, excuse me, 6s, 2006 as a very tight stop, or for a looser stop if you really think we're gonna go lower, these 42s. I wouldn't even give it that much because I'll be underwater. I'm still holding ES futures short. I anticipate a trade lower on the Globex Open into the early week. My opinion is people want to get out of Dodge, and the faster the better. So let's hit them, and happy holidays. I am gonna continue a video in separate videos, so I guess a little bit of coaching for the people who definitely need it. A lot of people I haven't forgot about. I have responded. Please check emails. If not, you can find me on Twitter. I'll get to Skype. I know somebody did ask me about that as well. Any requests, just send them my way. I'll keep them going. And but pretty much for right now for this video, I know it is longer than 2. It's probably an hour now. Yeah, going on. So let's get this one up, and guys, have a good, safe trading week. Peace.